Good morning, everybody. We're going to start the Finance Committee on February 27th. It is now 8:03. I'm going to share my screen briefly, and then I'm going to turn it over to Jamie Doyle from PFM, who will be doing a presentation. Can everybody see my screen? Yes.
Yes.
Okay, so I just wanted to go over the agenda. We have a short agenda today. We have 3 agenda items. The first is to discuss our 2024 borrowing. This will be the first phase of our 3-phase borrowing for the middle school project. It's a $30 million borrowing in total. So this is phase 1. I will be handing the screen over shortly to Jamie Doyle, who's from PFM. For those of you who have been through this before, Jamie has been with us since before I started on the district. So she's a pro at this borrowing. So she will go through the normal presentation and the slides to show the market update and analysis. I'll go through that in a minute. The next agenda item is the lift bus purchase. Mr. Nate Bray has joined us on this, our Director of Transportation. So we'll talk about that purchase. And then the last is I'll give a brief overview of the state budget that was presented a couple weeks ago. Oh, sorry. So just a quick highlight, Jamie Doyle, the Managing Director, and Carly Kiesling, the Senior Managing Consultant from PFM Financial Advisors, will be giving a presentation. The agenda items for that is a municipal market update, a summary of our standing debt. They will go through the 30 million borrowing plan, and we'll highlight our April 2024 plan, which is phase 1, and this is for the middle school project, and then provide an estimated timeline. And then we'll shoot back to that as far as what we need from the Finance Committee and from the board moving forward on this. So I am going to stop sharing right now and turn it over to Jamie Doyle.
Good morning, everyone. It's a pleasure to be here this morning. And hopefully you can see my screen now. I like to start off each meeting talking a little bit about the market and interest rates. And so that's what this first page illustrates. This is the BVAL curve, which is a tax-exempt curve that we follow very closely because you as a school district get to borrow at tax-exempt rates, which are lower than any rates that you could access in your personal life. We continue to, at the blue line, enjoy an inverted yield curve. So you can see how on the short end of the curve in year 1, the rate is higher. And that's good news because the short end of the curve is where you invest your money, whether it's your construction fund for the project or whether it's other investments of the district. Right now, a liquid rate is about 5.5% to invest at. And then you can see the rate dips down. That's the inversion part of the curve. And then it levels off and is really pretty flat on the long end of the curve, which is also good news. The long end of the curve is where you borrow and lock in rates. You can also see that rates are currently below the red line or below the historic average, which is also good news. So right now you're investing at about 5.5% and you're able to borrow at, I'll call it 4.25% to 4.5%. So there's a positive spread of over 1% in your favor right now when you compare your investment rate to your potential borrowing rate. The second snapshot, it's the same index. It just shows the BVAL index going all the way back to 1993. So you can get a more historic perspective of where we are when I say we're below average right now on the long end of the curve. And the bottom snapshot, again, the same rate. It's just a zoom in on this rate for calendar year 2023 to present. So you can get a bird's eye view of what's been going on. And really since Halloween of 2023, the end of October, rates have very much moved in your favor from a borrowing perspective. That short end of the curve has stayed high, that 5.5% that I mentioned earlier, but the long end of the curve at which you borrow has really improved pretty significantly since the end of October. If we look at the next page, the top half of the page, as always, is your debt portfolio and illustrates gross debt service, meaning principal and interest that you owe on each of your various issues that are laid out in columns 2 through 11. And the bottom half of the page is your local share after you get some state reimbursement on some of your older issues. So the bottom half of the page is principal plus interest minus the old grandfathered plan con reimbursement. And you can tell which issues get that old grandfathered plan con reimbursement. Near the bottom, the line labeled PE percentage. If there's a percentage on that line, you are receiving the old grandfathered plan con reimbursement. And then at the very bottom, you can see purpose. You can see most of these issues either refunded something even older or was new money at the time, including the series of 2023, your most recent issue that we just did last year. So this last column is important because that's the all-in annual effect on your budget. And as you look down that column, you can see there are some drop-offs beginning in fiscal year 2030. And that column's important because that's how we determine the most cost-effective way to structure new debt that you'll be considering taking on. You can see right now in the gray shaded box, your outstanding principal on all of your issues is just over $99 million. That's principal only. That's what counts on your debt statement at DCED. The next page is the important page. This is a summary of the 3-step plan for your middle school project. We're really just talking about the blue column today because we'll be back each year to have this same conversation and update this information and kick the tires. Once you get your bids in, this will get tweaked and updated. And as we get more information, we'll continue to hone and refine this. But in the blue column, you can see that's the first $10 million borrowing. And you may recall from prior presentations, $10 million is kind of a magic number in the IRS realm. As long as you have expectations of issuing 10 million or less in any calendar year, you get an even lower tax exempt rate. It's called a bank qualified rate. And that's what this plan anticipates. That's why each step is capped at $10 million. This is a wraparound structure, as I mentioned on the prior page. What that means is in column 6, you'll see your existing local effort that we just looked at. So if you did nothing, you'd continue to make the payments in column 6. And the wraparound of this first 10 million, you can see a conservative estimate of that in column 7. You can see the payments start off a little bit smaller, $555,000 a year. I'll call that on average. And then as your old debt in column 6 starts to drop off, the payments start to increase in the blue column. And you can see the final payment on this 10 million we're talking about would go out to 2045. That's the wraparound, smaller payments up front, larger payments on the end, because by state law, you must have overall level or declining debt service. And that's what this plan would ultimately provide to the district. You've used this wraparound structure many times in the past. And, you know, if all 3 steps, each 10 million over the next couple of calendar years work out exactly as we've illustrated here, at the end of the day, you'd be left with column 11, which as you look down column 11, you can see is slightly declining to level debt service. And again, would satisfy state law. The overall millage equivalent of this entire $30 million borrowing is estimated to be 1.29 mils. You can see out in the final column. And if we start at the top of that column and work our way down, you can see that's roughly 0.45 mils in the budget you're working on now for the upcoming fiscal year, and then a similar amount in year 2 and year 3. And a small decline out there in year 4. And then, like I said, your payments are either level or declining at that point in time. So this plan really provides you with a lot of flexibility in terms of other capital needs that you might have further down the road. The last page of my handout is a sample timeline. If the Finance Committee is ready to move this forward to a voting meeting, we could have that paperwork, the parameters resolution ready for your voting meeting on March 19th for the board's full consideration. If that parameters resolution would pass at that meeting, we would be in a position to have the competitive internet auction, which is how the district locks in the interest rate and sells the bonds to the end investors. We could have that sale as early as March 26th, and then settlement would be roughly a month later on April 30th. The important date is really the sale date, March 26th. That's when you lock in the interest rates and eliminate that interest rate risk on that $10 million portion. And then April 30th is when the money shows up in your construction fund account and becomes available to invest and to pay construction invoices. So I'm going to pause there, and some of this may look familiar because this is just a continuation of the plan that we started prior to last year's borrowing, but I'll entertain any questions that you have at this time.
I don't actually have any questions, but you're right. It's sort of like deja vu going through these numbers. But I always appreciate hearing from you, and you know, you're delving into to how all this works out and carries into the future. So I do appreciate your time and your explanations.
Yeah, I don't, well, I do have a question. So in terms of the rates that are being offered, when are they readjusted? I guess that's my.
The first 10 million that we're talking about, the rates would be locked in March 26th. On the second 10 million and the third 10 million, they'll continue to just be estimates until, you know, we get to calendar year 2025 and calendar year 2026. We'll have a similar conversation to this one prior to going to the market. But, you know, step 2 and step 3 are just estimates until we get to the point of sale.
Okay, thank you.
You're welcome.
I think you just answered my question, but I just want to re-ask it to make sure I'm understanding correctly. So what the board is being asked to move forward today is just for the first 10 million, and then those second 2 will be in subsequent years.
Yes.
I guess, okay, so I am understanding it correctly. I guess the question I have is, what if the financial situation looks completely different next year? Like, what are the risks of starting with 10 million, but then what if next year it felt different about sort of what the district's capacity was to continue?
Sure.
Do you get what I'm saying? Because I
know-
don't want to invest, you know, like investing in a huge project, you want to commit to the full amount so you can do it fully, but I would just love a little more explanation about.
Absolutely. That's a great
Or-
question. So most districts break it into pieces as opposed to borrowing the entire amount up front. That gives you a lot of flexibility in terms of phasing it into your budget. See how we're phasing in, you know, over several different fiscal years, as opposed to if you borrow it all up front, the debt service, you know, hits your budget all up front. So this makes it more manageable. This also, again, gets you that lower bank qualified interest rate. And I didn't mention it, but the other thing that it gets you is a 5-year call feature. You know, if you did more than 10 million in a calendar year, you'd get a 7 to 10 year call feature. And the call feature is the date to which you promise the end investors they're going to get to hold the bonds at a minimum. So, you know, an investor, they might want, you know, a longer call date. You want the shortest possible call date because that gives you maximum flexibility in the future for things like if there's a refunding opportunity that market conditions permit. If something bad happens and you need to restructure your debt, that call feature will be important. Or, you know, if something really good happens and you want to pay your debt down more quickly, that 5-year call feature would be important. So this plan gives you a lot of flexibility. But to your point, if something changed, you know, when we get to the next step, that will be incorporated into the plan. You know, we're not wed to 10 million and 10 million. If something really drastically changed, you know, with your cash flow of the project, your construction draw schedule, or market conditions in general, you know, we would be adapting the plan accordingly and you know, advising you of your options to proceed. Does that
Thank
answer
you.
your
That-
question?
Yeah, that was very helpful to understand the agility within that structure. And then the other question I had is the millage impact. What pressure does that put on the conversations about the tax rate? And that might be a question for Ms. Green, but
Sure, I'll take that one. So you can see that they did the estimate impact on millage, so that gets taken into consideration. That will be our next meeting, March 15th, because that'll be first look at budget. So these are types of things that I will incorporate into the budget, and this is where we talk about new things that are new that are impacting the budget that weren't there before, that we either have to realign some money in our existing budget to adjust for this new expense that's coming on board, or this will be addressed by increase in taxes. So this is one of the things that I look at, just like salary increases, benefits, everything else, our debt with our projects. We've been talking about this for a while, so this is not nothing that I did not anticipate coming into these next upcoming budget years.
thank you.
Yeah, I actually, I find it helpful. I save everything, so I'm actually looking at the last version of this that had the borrowing from last year, and it's nice to see how the numbers are all stacked up and, you know, not changing in any substantial way, including that estimated millage impact.
Yes, this is very helpful in long-term planning and aligning with our capital needs. So Jamie does an excellent job, and Jamie and Carly does an excellent job in helping with that through these documents and presentations. Any other questions for this? Okay, Jamie, if you can stop sharing your screen. Thank you. So at this point, what we're looking from the finance committee is we just need, it's not a legal vote or anything else. It's just authorization for us to proceed with the team. That's PFM, that's our bond counsel, myself, so that we can move forward to then get the parameters resolution on the board agenda on March 19th. So if everybody on this committee is okay with us moving forward with this first $10 million, based upon the schedule that Jamie laid out, that's what we're looking for today from the finance committee. Everybody in agreement? Are we good?
Yes.
Sounds good
I
to
am
me.
in agreement. I am in
Let's do it.
Okay. Sounds good. Okay. Thank you, Jamie and Carly. You guys are more than welcome to stay if you want to see the rest of this presentation, but if not, I'm sure you guys have things to do. So I appreciate your time and the presentation.
Thanks so much. Have a great day.
Thank you. Okay, I'm gonna share my screen again. Can everybody see that? Okay. So again, and we'll revisit this at the end of the presentation because there's a couple things coming out of the finance committee that we need some go-aheads on. So we'll revisit this at the end. All right, so the next is to talk about a 2024 Lyft bus purchase. It's a 27 passenger bus. We've had constant conversations about in finance and both property about our bus fleet. And one of the things that I want to highlight is right now the availability on purchasing buses. We're looking at about a 12 to 18 month lag. So if you recall, for the members that were on this committee, back in December of 2022, we were given authorization to move forward to purchase two buses. We still have not received those buses. We anticipate that delivery is going to be somewhere between mid-April. We're hoping and crossing our fingers. Those were an 84 and a 72 passenger bus. But just to give you an idea of kind of lag time between when we place the order and when we actually get those buses in our hands is about 12 to 18 months. So Mr. Bray, always looking into these types of things, works with Brightbill. There was an availability of a Lyft bus, a 27 passenger that is on the lot and available right now for purchase. There will be about a 3-week turnaround just because there's some kind of bells and whistles that we need to make sure are on the bus to get it ready for the road, but you can see that that immediate purchase versus our 12 to 18-month lag is very, very different. So historically, the need for this lift bus, our historical routing requires that we have 2 lift buses on the road. And then we have a spare unit. That spare unit doesn't have the same capacity as our other 2 lift buses. However, it is the spare and it can be used in the event that one of the other lift bus goes down. Based on current routing, we currently require all 3 of our lift buses to be on the road. So that leaves us no spare, and it also leaves us a lift bus that the capacity is not the same as the other 2. So what we are requesting from the Finance Committee meeting today is that we want to move forward, because not only would this be a part of our rotation of the bus coming out, it will replace a 2006 24-passenger bus. It will put us back into capacity for our lift buses where we do have a spare. And again, the availability is immediate. It's $122,225 at Sourcewell pricing. This will come out of the capital reserve. Again, this is going to be considered part of the normal rotation. The difference is just the timing of when we're able to receive this bus and get it out on the road compared to our other buses. So if you have any questions specifically about the bus, Mr. Bray is available to take any of those questions. If you have any questions to me regarding financing or anything else, I'm happy to hear that. But what we're requesting is to kind of jump on this opportunity to make the replacement. Again, it will replace an existing bus in our fleet to update it with a newer bus. Because of the timing as well with our next meeting, we are looking for the Finance Committee to authorize both myself and Mr. Bray to move forward with this purchase so that we don't miss this opportunity, and then we will ratify it at the March 19th board meeting. So I will leave it open to questions at this point.
Ms. Green, I just have one question. The purchasing the bus certainly makes sense. The purchase price though, does that, you mentioned bells and whistles that had to be added before. Does that include the addition of the bell? Is that all in, or will the addition of stuff increase the purchase price?
Good question. That is all in.
Okay.
And then I mean, I think this also makes sense as an opportunity, but just want to check, is there something else that gets cut or shifted as a result of this purchase? Or is it something that there was already money set aside for, but you're just applying it to this opportunity?
Yeah,
instead
so
of
one of the things when I first came on board is Mr. King. He was my predecessor. He was working to transfer money into the capital reserve over a few years to build up capacity in the capital reserve, that in the event that we needed to start replacing buses, that we would have the ability to do so. So money has been set aside in the capital reserve for this. So it is not replacing nothing else will not get done as a result of us purchasing this bus.
Excellent. Thank you.
Okay. Any other questions?
And Kara, just, I think I got the sense of this, but I just want to confirm. So this was not like on our radar as to happen right now, but it was coming up, and because we have this immediate opportunity, it was pushed forward, right?
Yes, we were going to have at some point a conversation about the bus fleet. You know, probably once a year we come to the Finance Committee or the Property Committee to talk about buses, because we want to make sure that we're not in a position where, you know, number one, we have old equipment on the road, and that we're keeping up to date with that, so that we don't get into a position where we're purchasing 10, 20 buses at one time in 1 year, because it has about a 15-year life cycle. So again, this would be a phasing of those buses. And again, the need was, the availability was immediate. So I think it was a perfect opportunity for us to jump on this, to hit a portion of our replacement that we would be asking for this year.
Sounds great.
Any other questions?
This may just be bigger
Sure.
picture about buses and transport, and happy to talk about it. But I was just curious if the district gets any sort of state or like Department of Transportation, like, are there any funding opportunities
As far-
available that haven't been explored yet for the continued need for the buses?
Not for the current buses that we're replacing with. No, we've had a higher level conversation on the electric buses. And we talked about that, but kind of where we are on the electric bus situation is, as you all know, we've been having conversations about a bus depot that would allow us to be future ready for that, and we're not at that point yet.
Oh, yeah. Sorry, I didn't mean the electric buses. I just meant
No.
in general,
That-
more
yeah.
resources towards buses since this continues to be.
No,
Okay.
basically the funding is going into alternative fuel vehicles. And that's where you'll see the additional grants, not for the diesel or the gas buses that are on the road right now. So we do get funding, we get state subsidy from the state, from PDE towards transportation, but not additional with the purchase of buses. Right now, the funding is all being earmarked for those specialty buses.
All right, so I do have a question. That's regarding the 2006 vehicle. That's going to be placed in reserve, not going to be retired, correct?
I will kick that over to Mr. Bray, so I don't misspeak on that.
Sure, that one, my recommendation would be we either do trade value with the dealership or look at scrap value. However, that has pretty well had a good life. I would consider it fully depreciated. It is not worth us keeping in the fleet at this point.
Okay, thank you.
You're welcome. Any other questions? And can I get a sense on, is the committee okay with authorizing myself and Mr. Bray moving forward on this, and then we ratify it at the March meeting?
Yes.
Yes.
Yep.
Yes, I'm okay with it.
Okay. Perfect, thank you. Okay, the next slide that we have up is I just want to give a quick overview of the state budget. Governor Shapiro did his budget address on Tuesday, February 6th. I don't know if anybody watched it or saw highlights or is getting correspondence in about that budget address. As you know, it is just an address. There is work to be done at this point in the state as far as the adoption of the budget. Historically, they have not adopted a budget on time over the last few years. So, you know, the things that are in this budget, I think Dr. Yannicone, you know, may communicate when she talks about budget is that I'm very conservative when it comes to state numbers. I don't get excited about them too often when I'm planning for budget because of that whole timing of everything. You don't know what's in, you don't know what's out. The good thing is that he talks about, again, heavily investing in K-12 education. So he's continuing the lines of Governor Wolf. But this is just a quick snapshot to show some of those highlights that would impact K-12 education in the state of PA and specifically how it impacts our district. So basic ed funding, it's an increase of 1.1 billion. Of which 900 million is a first year adequacy investment. So that goes to, that's kind of leveling off funding for different districts. When you look at some of those districts that are getting the first time adequacy, it is the lower income districts or lower poverty districts that are getting that. And then there's a $200 million distribution through the basic ed funding formula, which would impact us. Our proposed allocation increase is 115,962. So out of that 1.1 billion, that is our chunk of the pie that would be increased for the 24-25 budget year for basic ed. In special ed funding, it's an overall increase of 50 million. That would impact the district by a little over $18,000. The big highlight that I would be curious to track is the cyber charter reform. This is an establishment, and we've been talking about this for a while, of making it fair for cyber charter and what districts have to pay into cyber charters versus brick and mortar charter. So it's an establishment of a statewide cyber tuition rate of $8,000 per student. Just so that you have an idea of where we're at right now, what we pay with our cyber charter rates, we have to fill out a form that calculates this tuition rate. It's called the PDE 363. That's what Sam does for us. So when we get billed by charter schools, that is how that rate is determined. So right now our general education rate is a little over $17,000 and our special education rate is a little over $38,000. we do have to pay that to cyber charters. So you see that with this reform, if that came to fruition, that would be a big savings to the district. The majority of our students are in cyber charter. So that would be a win. So that's something that I'm keeping my eye on. That is something that has been a fight for a while. So at least it's being put on the platform, and maybe there will be some movement on it. The other thing that he is focusing on is school safety and security grants. Allocations have not yet been determined, but that is something that he is looking to implement in this year's budget. So that's kind of the high level of Governor Shapiro's budget and how it would impact our district. Again, next meeting, you will see as we go through the budget, first look budget process. I will not put these numbers in there. They're not a major impact to our budget either way. But I always stay conservative and just use the prior year's allocation. As you see, allocations normally do not go down. If anything, they'll flatline or there will be a little bit of a bump. So I stay conservative with that. But just wanted to give you a high level look at what Governor Shapiro's plan is as far as the 24-25 state budget. Any questions on this?
That's great. Actually, I have one. What is our count of students enrolled in cyber charter, if you happen to know?
You know what? I don't want to give you a number. I will get that for you though. I don't
Okay, it's
have
just
fingers.
curious.
Yep,
Thanks.
no problem. I will definitely follow up with that information. Any other
Thank you.
questions? Okay. All right, so I just wanted to, we've had a lot of things thrown at you in a short period of time, so I just wanted to go back through the authorizations that are happening through the Finance Committee. It's authorizing us to work with the team to move forward on the bond parameters resolution that will be approved at the March 19th board meeting by the full board. And then it also, the Finance Committee is also authorizing myself and Mr. Bray to move forward on the purchase of the lift bus, which will be ratified at the March 19th meeting. Everybody okay with all of those authorizations and moving forward to the March 19th board meeting for the full vote?
Yes.
Yes.
Yes, yes, I am.
Okay. Perfect. And then last is next steps. Big meeting is March 15th. That'll be the first look at budget. It's always the funnest meeting of the year. So bring your calculators and pads and pencils and be ready for questions and a lot of information at our March 15th meeting. Right now, that's the only agenda topic because it's usually a hefty topic and a lot of numbers. So that's what you all have to look forward to, March 15th. Okay, if there's no other questions, I do not have any other items. Dr. Yannicone?
No, but it's just occurring to me that we scheduled that finance meeting on the odds of March. Do our best not to have that be predictive. Thank you all.
All right, thank you, everybody. Appreciate your
Thank
time.
you.
Thank
All right.
Have a
you.
great day.
Thanks.
Have a great
Bye.
day.